Well, a wonderful good morning to all the people that have lined up to join us this morning. I'm really excited for this session today. We're expecting a lot of people to jump in today. So very good morning. I am live from Pretoria. It's nice and sunny today. It's been a rough couple of days, but it's certainly started to look up a bit and warm. I think this is perhaps the last hurrah of the summer. I sense that we might get a bit of a chilling winter coming our way soon. But good morning, good to have you. As you come in, please go to the chat section, select all panelists and attendees, tell us who you are, tell us your name, perhaps even tell us your company. If you're not in Gauteng or not even in South Africa, tell us if you're dialing in from another part of the world. It'd be good to know. So say hello. And I urge you, it's a little pet hate of mine that I have with Zoom, that you have to select all panelists and attendees so that we can engage with your chat. So all panelists and attendees, if you want to communicate, say hello, tell us who you are. It'll be great to have you. I'm really looking forward to this session. I've got two superstars with me today, which I'll introduce in a sec. But then again, you also can see them on the screen. So welcome, the Blueprint for Tax Compliance Automation, a practical approach to automating your tax compliance. This is the webinar that you're hoping to join today. Then you're definitely at the right place. If it looks like a bit foreign, stick around, you'll definitely learn something. And as you do, we're really filling up the room very nicely. So good to have a lot of people. Grant, morning. Nishana, good morning. Lida Erasmus from APSA Group Tax, good morning. I see you. Emma Weir, good morning. And thank you everybody for selecting all panelists and attendees as we get ready to kick off our session.
Emma, we don't believe you that you're saying you're phoning from a sunny UK. We don't believe you. Sunny
yeah,
UK,
we're not
those words.
We're not going to accept that. We're not going to accept it. We know it's June somewhere in the UK, but yes, it is true. But I know we're getting into winter, Emma. Thank you very much for rubbing that in a little bit more. How's it, Ash from Sage Accounting? Good morning. And good morning, Marilise. Great to have everybody. And welcome once again to those that are just joining us. We've hit some very good numbers today.
And obviously the Cape Town team have to rub in from beautiful Cape Town. Beautiful Cape Town. Cape Town. No one's saying they're from beautiful Joburg.
Yeah, exactly. That's why I had to go with the sunny Pretoria, because I knew I would have a couple of people from beautiful Cape Town. But I get it. And there you go. John from Mpumalanga. That's how you do it. Good morning, John. Awesome, awesome. So I'm going to stop sharing my screen quickly so I can engage with the people as you come in. Still giving it a few more, perhaps a minute or so to kind of get us going. I'm really excited to have this webinar today. So once again, good morning. My name is Brian. If you haven't met me, I'm the community manager at CFO South Africa. And it gives me a great pleasure to welcome you today to this webinar brought to you by Konsise. So automation is becoming ubiquitous across most financial processes, but most companies' tax processes still stuck in the manual, lack the necessary controls, etc. And did you know that SARS recently invested about 3 billion in technology to clamp down on non-compliance? So manual tax processes have now taken a center stage as a key risk. But we know that automation is perhaps the solution, and this is why I've got these two superstars that are joining me today to take us through this webinar. So the webinar will give you practical insights into automating your tax compliance processes, the skills you need, and the technology perhaps you should choose. So today I'm joined by Tertia Barrett, who's the Managing Director of Konsise. She will explain what you need to be looking out for in the automation technology. I'm also joined by Karl Muller, who's the Tax Director at Global Projects at Unilever. He will present some key learnings from automating tax across the globe. So this is a man who's traveled widely, so we'll pull in a lot of insights from the things that he has done. So great to see that a lot of you have come in and have heeded to the guidelines of selecting all attendees and panelists. I forget which one comes first. It could be all panelists and attendees in the chat when you want to communicate with us. As we go along, if any question comes up, please feel free to put your question on the chat. I will try and pick it up when we have sort of a Q&A session towards the end of it. So don't be shy. Often finance people or tax people often shy to post their questions, but let that be today. So I want to formally introduce my panelists today. I have Tertia Barrett.
Thanks, Brian.
Tertia, Director of Konsise, and I have Karl Muller.
Hi, everyone.
How's it, Karl? Okay,
just for the record, you're not actually in the bush today, Karl. You're not actually, you don't actually have zebras behind you.
That's where I wish I could have been, is out in the bush. But I enjoy using wildlife as the background. So because tax is a bit of a wildlife area in any event. So.
Nicely put. It is a wild animal, isn't it? A bit of a unicorn sometimes, eh?
Yeah.
Okay, so before I pull these guys together with me into a conversation so we can start this journey, I wanted to get a sense of who we have in the crowd. And to do that, I'm going to launch a poll for you. I'll have two questions. I'm going to launch it on screen now. And two questions. The first one is, what is your role regarding tax at your company? Right? Let us know, your responses to that. It's the first part of the question. And you can even tackle the second question as well. At what stage is your automation for your business currently? At what stage is your tax automation in your business? But good to know where everybody is. You can see responses are starting to come in. So two-part questions to get us going for today. Set us up nicely for what we have in store for you for the next 15 minutes or so. Okay. It is a multiple choice, so it should be fairly easy to pick one of these. I think when Tertia and I were sitting and doing this, we're like, are we sure? Perhaps there's more options that people are in regarding. So we just put the other bracket. The other bracket always helps, but I see there's only sitting on about 10 of us so far. Majority of people are saying management and oversight of tax, which is quite interesting so far on the first question. On the second question, what stage of tax automation is your business? So a significant amount of us, I'm talking about, close to 40% have not even started the tax automation journey. Remember, SARS have invested quite a bit of rand in this. So close to 40% of us have not started the tax automation. But 30% of us or so are early stage, starting to evaluate what we can improve. So great to have the at least 30% of you believe that's, you've come to the right webinar to figure this out. Going back to kind of question one, it's still sitting, about 10 people say, about 14% of us, they don't really, there's an other in terms of what they do. So be curious to know in the chat what that other is. What is your role regarding tax at your company? Your other role other than listed, perhaps you can share in the chat. Okay, I'm gonna let it run for perhaps another IT related. That's from Irene. Okay.
Hello, Irene. Nice of you to join.
Okay, so we're still sitting, what, close to 40% have not started.
Thanks, Jess.
How's it, Jessica? Jessica is in sales. Okay, so we're running a poll for those that are just joining us. We're running a poll, two questions. What is your role regarding tax at your company. Multiple choice question, tick the one that closely suits who you are. The second question is, at what stage is your tax automation, is tax automation in your business? Is your business in? At what stage is tax automation in your business? I think we've done well. We've got some good numbers, Tertia.
Mm. It's interesting, you have 10 people arrive in one go.
Yeah, that could easily shift the scales. We're sitting, close to, very close to 100 people on this call, which is excellent. And at least 80% of us have responded to the poll. I'm hoping to push that a little bit more. Gonna give you 20 more seconds, and then we can get the show on the road.
Just to let everyone know, Brian is not competitive when it comes to getting polls answered.
Not at all. All right, thank you. We've hit the 80% mark. I think this is a good quorum for us to get a good insight. And Emma says, yeah, right. I know. I'm always going to...
10 more seconds. Okay. 10 more seconds.
I'm leaving it for a bit. I'll leave it for a bit. I'll leave it for a bit up there. But great. Thank you, everybody that's taken part in the poll. I want to get into the meat of our discussions. But just in summary, we're saying 40% of us are in management and tax oversight. Those are the roles that the bulk of us sit in. And about 35% of us have not even started the tax automation journey. So that's quite interesting as I close off the chat. And I close off that poll. Okay, so I wanted to kick us off. I wanted to get into a quick discussion, and I'm gonna call on Tertia with this, and just to kind of lay the foundation for us, Tertia. So taxes is nothing new for companies, no. Where has this drive come from to automate the tax processes?
It's interesting because there's quite a lot of things at play that's kind of led up to where we are now. So on the one side, exactly like you said, tax is not new. For most companies, there's some tax obligation that they need to do every single month. So every single month there's either VAT or pay as you earn, and they have to process it, they have to submit it, got provisional tax returns, income tax returns. So there's a lot of compliance obligation on companies. And it happens every month. Like I said, it doesn't go away. At the same time, what I find interesting, if you look at business over the last 10, 15 years, so many businesses have embarked on digital transformation and have pretty much automated every single part of the business. From accounting to sales to customer experience. Yet we're in the space where tax is still very much a manual process. It's almost like people left it and thought, well, it's not important. A lot of people view tax as not something that's going to contribute to business growth. So we're going to park the tax team there. You're just going to do what you've always done, and we're going to automate the rest of the business. So that's happened. And having gone through this digital transformation journey across many businesses, we also know the risks with manual systems, the risk of errors, the lack of controls, the amount of time we spend doing manual work instead of actually stepping back and adding value to the business. So that's happened. So in most companies, tax processes are pretty much manual. At the same time, you've got SARS, as you've mentioned a few times, that have just invested $3 billion in upskilling their technologies to clamp down on compliance. And it's not just SARS. Revenue services across the globe are investing massive amounts in technology to clamp down on compliance. So you've got SARS investing significantly, upskilling, and I love always what Karl says, no one's going to implement old technology now. They're going to go straight to the latest, greatest, best cutting edge technology. So you've got SARS investing, and you've got companies on manual systems, and it's really just created this kind of, we want to call it a tipping point to go, hang on, if SARS is investing so much, can we really as a business still afford to run manual systems? Like, it just doesn't make sense. And if SARS starts knocking on our door, are we going to pull out our spreadsheets and our files and our processes? It's not going to work. It's a massive risk to business. And it's one of the reasons why companies should start automating their process. That's kind of the one side, kind of what's pushing us to do it now. On the other side, if you think of any tax department, anyone who's embarked on a digital transformation journey, if you are using innovative technologies, by using analytics, it really changes how we add value to the business. It allows us to make better decisions based on data, validate our results, enable us to plan more strategically. And that kind of aspirational part is what more can we as a tax department offer the business? I think that's the other reason that's driving this. So that's my answer. It's really those two parts, those two drivers that are colliding at the same time.
Awesome, awesome. I heard you mention digitization, and it's been a buzzword now, right, for the last couple of years. And I'm going to call on Karl. Karl, okay, so what is the reason? Why did Unilever embarked on this tax automation kind of journey? What is the reason they did that?
Well, Brian, what happened with us is it was about 4 years ago now 3 years ago. We sat down as a tax leadership and had a look at, how we compare to what we would see as an ideal tax function. And we also had a look at what some other multinationals have done, the Shells of this world, some of the big corporates, and try to have a look at where do we fit in. And one of the questions we specifically asked is, how much technology do we use? What are we actually using? And where do we want to be? So we did an average, we did a benchmark of ourselves, and we were quite happy that we had a good compliance system running, but we found ourselves being sort of in the middle or just below the mid range, and we thought we've got to get somewhere else. We've got to get ahead of this curve. We can add much more value as a tax function to the business than sitting in the back office doing all sorts of things. So that's where we really embarked on the vision to say, well, what do we need to do? And we decided we've got to leverage technology. So really put together the technology strategy. Do we want to own it? Do we want to buy it in? Do we want software as a service? Do you want to outsource? And what do we want to do? And our view was that really, I think a tax specialist should be a consultant to the business, should really be able to advise the business on how to do things, and not sitting and filling in tax returns, etc. On the other hand, we had a look, and spreadsheets are just, somehow people just fall in love with these things. And the only thing I know for sure is that any spreadsheet has got at least 3 fantastic errors on it somewhere, which could cost you money. But the volume of data has grown so much, there is just no ways that you can continue doing it that way. So we really decided, we've got to change our model. And we went ahead on this and had a look at how would we go about it. We actually did a design. What do we think we could do? We didn't want to go to become best in class. We decided to move. Let's get into the top 75%. We want to be around there in that top quartile, even if it's at the bottom of that. And we then looked at, could we standardize processes? Could we make better uses of data lakes, etc.? And we then went ahead, designed this, did a proof of concept in which we went to different countries and tested this in different systems and with different platforms and different levels of complexity, and actually found there was a very good fit. And in our local variations that we found were actually limited in process, although the taxes are different. And in country, the process is pretty stock standard across the globe. Doesn't matter what tax system you're in. And believe you me, you can go and look at the French systems, the Russian systems, the US systems, the Brazilian systems. They've all got a pretty similar process, although they're massively different and complex. And in the technology side, we really had a look at, with, as Tertia has mentioned, the whole digitization of the business. Sitting in the background, we've got all this digital services tax coming across, and we suddenly realized there's a lot of issues that are going to come up. And those that follow the OECD and you look at Pillar 1 and Pillar 2, go and have a good read about that, because there's a big change coming in the world around that. But we realized automation, to be able to do data analytics and to improve the quality of our data up front would help so much more in compliance, because half the time tax people are chasing their tails, trying to fix data a year after the fact. Fix it at the start, not later on. And that's where we got into this whole idea of technology, and we really focused on pretty much trying to get analytics and data quality in-house, but we're not interested. We're interested in investing in tax compliance software ourselves. So we buy that in as a software as a service, or from a third-party service provider. The other thing that, and that comes from the experience I had, and I worked in a number of countries where they do horizontal monitoring, or what we call cooperative compliance, where you go hand in hand with the tax authorities. They actually come look at your systems. They want to look at your data. They want real-time access to your data. So they get that. So in Russia, for instance, I think the deputy commissioner is an ex-SAP expert. So you can't tell them anything about SAP. They know exactly how it operates. They want to see your system, see the automated controls. They want to make sure that, for instance, your VAT, how are you making sure that you've got the right tax codes, putting it to the right accounts, that you're not claiming incorrect VAT, for instance. So they've got access to your system. They want reports on the controls that you're doing, and they want to see them automated. As soon as you tell them it's a manual control, they say it's not good enough. We want to see it automated. And this is where tax authorities are going to. And so we realized with all of that, to be able to bring in automation, bring in data analytics, to fix data up front and act at source, not after the fact, that became much more important. And therefore, we've got a full technology strategy that we roll out, and all our data analytics that we do. But for us, it's a really important thing is you've got to start getting your data ready. And I'll probably go into a little bit more detail later on as we discuss the rest of our journey. It's no good just now being a tax technical expert either. You've actually got to understand data scientists as well. So if I look at a tax department in the future, I think it might be 60% tax experts and 40% data scientists. And I know the tax people out there might shoot me, but I think it's easier to teach a data scientist tax than to try and teach a tax person data science. And believe me, I'm past my sell-by date on a lot of these things, and it's fascinating and interesting. But you absolutely have to get technology to help you analyze your data, to pull everything together. And believe you me, on the journey that we've had, the value that we've managed to pull out, the errors that we found, the improved processes that we started picking up, really brings a lot of value in very unexpected places from time to time. But that's why we did it, and that's a little bit of a hint of how we went about it.
Oh, you're not that long in the tooth. I'm sure there's plenty of time for you to do some.
He rides zebras. I mean,
some data analysis. Tertia, Karl, actually, Karl, I'll come back to you shortly. I just have one question for Tertia before I come back to you, Karl. And we did the poll. We saw the numbers. We're talking about 40% of us here haven't even started, are not even on this journey. So, if it's not broken, why are we trying to fix this thing? People are not doing it.
There's no argument that digital transformation is hard. And, what's interesting, one of the biggest disruptors to innovation is past successes. If you look at corporate South Africa, if we're looking at the tax team and the people who are sitting on this call, they've got years of, running this very efficiently, running it very successfully, no issues. So why should why should we make it better? Why should we implement new technology and new systems where we're actually fine? So it is quite interesting, that's, like I said, it's one of the biggest disruptors to innovation is past successes. However, saying that, Karl's just mentioned, revenue services across the world are changing. And and that's something to accept. You're not automating your processes because something's broken. You're automating your processes to make you future ready, make you ready for when SARS comes knocking on your door and they're going, what, you're using a spreadsheet? And I love what Karl said, each spreadsheet has at least 3 errors on it. Spreadsheets are big and massive. You're running manual systems. You're not able to respond that quickly. And, especially when it comes to all the changes that, tax administration 3.0, all the changes coming from a tax administration, revenue services across the world, all the changes coming. One of the big things I think what's important for a tax department is not just to be as efficient as possible and to be able to, internally check the quality of your data proactively, I think just as important is by having those systems in place, if those changes come, you as a department are able to actually respond much more nimbly, much more agile, because you're ready for those changes coming in. I think, where we are now, I think people need to, need to change because they need to be ready for the changes that are coming. And I think Karl, Karl's got such an incredible success story of what they've done across the globe. But he just said, when they started, nothing was broken. Nothing was broken. They were running a really well-oiled machine, but they realized, could they be better? And even when they started embarking on this journey, you're suddenly going, hang on, we didn't even know this was a problem, but we weren't looking. And I think those are the surprises that come up when you start embarking on this journey.
All right, thanks for that, Karl. I promise I will come back to you. And I know you have prepared something to tell us a little bit more about these learnings. This is a good time to share your screen and tell us, what are the key insights? What have you found out there in tax automation?
All right, let me share my screen, and then we can have a look at everything. Just hopefully it all works. Can you all see that? Does it come up?
Perfect.
So I'm going to embark a little on the journey, but I'm also going to allude to where the tax authorities are going, because that was a really big driver. And as I said, we started before COVID, the old COVID issue. But the COVID issue has really exacerbated everything, because everything has become so much more digital, very much quicker than it did. But yeah, here's a little bit of a background as to why we did it. I mean, we call about the VUCA world, it's volatile, uncertain, complex, and ambiguous. And then to live in this world, you've got to be able to use your data properly, and you've got to try and stay ahead of the curve. You've got to be able to preempt where revenues are going, what they're going to check. You've got to be prepared. You've got to have that answer ready immediately. The other aspect that was really important as well is we just saw this increase in digital taxes, digital services taxes in India, and a lot of countries going ahead with that. The OECD was struggling a lot around the whole digitization of the economy, and where must tax happen. But even more important, and people might have missed it through the whole BEPS process. The whole BEPS process has gone into so much greater transparency. And that transparency requires more disclosure in order to do proper country by country reporting, to be able to see where you're paying taxes, all your withholding taxes. You really need to get to grips with a lot of your data. The bigger your group, the worse it becomes. But now tax authorities are sharing information with one another. It's no longer this thing that they might not find it or something. It's rife. The sharing is some of it is even outside of the normal protocols, but it's happening, and we know that. But because of that greater transparency, and also the social and the civil society, the social justice, etc., they want to make sure that corporates are paying the right amount of taxes. And very often they get it completely wrong, but these are the things they're looking at. So you need to be much more ahead of the curve, understand a lot more of your total tax contribution across all your various taxes. And some of them are hidden all over your P&L as well. But you've got to be able to disclose this and show what you're doing. But the biggest of all is the tax administrations are moving rapidly. And I want to stress that I think it's the developing world that is going to go past the developed world in this area, because in the developed world, most of the tax authorities already had pretty good and decent systems running, but in the developing world they had pretty much archaic or nothing out there. They are getting the best of the best, and we can see with how much e-invoicing, etc., is happening. And the OECD is really pushing this. And those of you who might have been following that, they've issued in 2020, they issued a document called Tax Administration 3.0. And it's worthwhile reading to see who the people that are contributing a lot to that. It's the Singapore Tax Authority, it's the Kenyan Tax Authority, it's the Russian Tax Authority. It's not the US and the UK, and so it's Finland is involved in that. So a lot of the developing countries are really going the digital route. And most of us, if you're just looking at e-filing and e-invoices, that's where SARS is. That's digital tax 2.0. But 3.0 is absolutely embedded in systems. It's real time, it's transparent, and it's trustworthy. And I don't want to make people frightened, but have a look at it. This is where we're going to, this whole connected world, that the tax authorities can get information from your bank. They can get it from other corporates. They can get it from the retail sector. They're linked into everything. They can actually see what you're doing. They can corroborate all your evidence before you've even given it to them. So when you give something to them, they've already got a whole lot of data that they can compare it against. And that's something we've all got to get into our systems. And as I've already mentioned, this international cooperation, the tax authorities are really, really working hard together with one another and helping one another. So you're going to see more and more of multi-country audits happening so that they can look at things across the globe. So anybody who's interested is really go to the OECD and download the Digital Tax Administration 3.0. It could be horrible reading. It could put you to sleep, but it could also give you nightmares. And this is maybe a little bit of a vision of what they're trying to do. You know, if you look at the Internet of Things, you look at the personal devices that everybody's got. But this area, this part of the iceberg that is below the water level, is they are really looking at making sure that corporates have got the right governance, the right controls, that they're being transparent, that they actually are very clear on what their tax principles, etc. are. And the ecosystem in which we now operate means that tax authorities have got so much more information at their fingertips, and they no longer just have to rely on what you give them, because that was tax administration 1.0. They've got nothing from you until you submit the document to them with all the supporting evidence. Now they can get these things earlier on. But now let me step back and say, now some of these were considerations that we also took, but these are some of the things that I would suggest that that corporates should be looking at. One is, what is your attitude towards tax transparency? Unilever does publish their set of tax principles. It's in the public domain, but we have very clear tax principles, and whatever we do and whenever we do anything, it gets measured against those principles. If you don't comply with all 10 of those principles, you will not enter into that transaction. But that means we can stand and look, and respond to civil society and respond to tax authorities, pass the blush test. It doesn't mean we don't make mistakes. It doesn't mean that they're errors, but it's a case of trying or making sure you're doing the right thing in spirit and in law. The other thing is you want to raise the bar in tax compliance. And the best way to do that is to try and standardize it, because then you can follow a process. We found we had lots of systems going, very good compliance systems, but they were disparate. If you can standardize, you can do so much more, and that's when you can use your analytics. And it's something that I was discussing with Tertia a while ago. You know, if you raise the bar in compliance, maybe the old story about, you're walking in the woods and you come across a bear, and there's two of you. You just have to run faster than the other person, and then you're okay. That's what you need to be doing. You've got to get ahead of the curve. If SARS or the tax authority comes to you and you've got good systems, they'll probably go and focus more on somebody else. And that's why we use cooperative compliance as well, is because the tax authority knows us. They come in, they've got a time to look at our stuff. They've done a risk assessment. They understand where we are, and their focus can change. Now, lots of countries don't have that ability. It is an expensive and a difficult system, but raise your bar in compliance, get a standardization. That's going to enable better analytics and give you a better focus on what you're doing. And you've got to use technology. Your manual systems cannot cope with the volume of data. If you want to go and do a VAT analysis, and I know many of the corporates in South Africa try and do an SD14 for VAT, it is a massive exercise, but you can automate it. You can do a lot of it. We use SAP, and we can pretty much do an SD14 on a month-by-month basis, at least 80% of it. So it's now much simpler. So you've got to use your technology and put together a technology strategy. However, and this is where most of you will be sitting, is every time you look at the business case for this, it's how do you make a business case? You know, when you buy an asset, you've got a return on investment, you've got growth in the business. Tax doesn't lend itself to that. But look at some of the benefits. If you look at your risk management, if you've had a number of audits, have a look at the adjustments that are made, how much time was taken. If you had a better process, how much time would you have saved? Those are all benefits. You lower your risk. You've got to be able to document and have tested controls as soon as you can prove that. Tax authorities, for instance, in Australia, they ask for those controls. They want to see what you're doing. I've already mentioned Russia. They do that as well. That's coming. The other thing is if you do this work up front and you do your analytics, you can correct errors before being audited. It's never nice to go to a tax authority and say, "Oh, you know, I made a mistake. I underpaid VAT by 100,000 Rand or something like that." But if you do that and you come clean with them, then you know you've at least then got a chance of not getting penalties. But you start building a relationship. They start trusting you more. If you've got errors in your system, and you will have, as we've embarked on this journey, I think in every country we've rolled out into, we've picked up errors that we've corrected and fixed. But errors cost money. If it's picked up on audit in South Africa, it's a 25% fine coming immediately on the tax element. It costs money and it's a waste. It's not tax deductible either. So don't go there. Make sure you come into an error-free thing. Then the other thing is you cannot look at your investment into going automation, the automation route on a normal return on investment model. You've got to go and have a look at as I've said, the risk possible benefits, the time that can be spent by tax people looking at other opportunities to reduce, for instance, customs and excise, and to maybe make more use of free trade agreements, etc. You will get a better use of your tax specialists because they're not doing the mundane chasing documents, looking for reasons for something. They can be part of the business. They can be part of the decision making. They can pick up what they're doing as they go along, so you can get much better use of them. But think through all of those things. Think out of the box. Don't go into your normal ROI model. It's not going to work. But you know. And just think realistically of what you can achieve. And I promise you, you will find more benefits as you go into this. What are your challenges? Well, it's to win hearts and minds, to be able to go to your CFO and say, you know, I'm going to invest X into this. And, you know, what's the return on investment? Well, you know, I can't make you promises, but these are the possible benefits. Doesn't always work. The other thing is some people are still married to spreadsheets. They don't like them, they love them. And you're going to say to them, I'm going to take this thing away from you and something else is going to take its place. They don't like that. So you've really got to spend some time winning hearts and minds. Change management, we're still in the journey, but change management is critical. It is. You've got to keep going at this and explain to people what the benefits are. You've got to show the benefits. You've got to monitor the benefits as you go through. You've actually got to dedicate 1 or 2 people that are just working on change management, depending obviously on the size of your business. But really, you've got to focus. You've got to do the same change management in an automation process as you would do in any other part of the business. And generally, people don't want to do that. And really, you've got to sit back. If you're going to do this transformation, you've got to think how you're going to do it. Are you going to go big bang? In other words, I'm going to take all my taxes all at once and I'm going to go to all the countries at the same time and implement it. Or are you going to go in a phased approach, do it country by country or a number of countries at a time? Are you going to do all the taxes in that country at the same time? Or are you going to go through countries tax by tax? Those are things you can have a look at. You've got to look at which taxes you want to do. Is it all direct, indirect, withholding taxes? Or is it only going to be VAT or only corporate income tax? you've got to decide where to start. And my advice would be is probably, your biggest throughput in tax is probably VAT. So that's probably the best place to start. But don't forget the corporate income tax. So it's probably better to do both at the same time. But you've got to think about it. And it's good. I was looking at the poll to see that, people are thinking about it. But, it's worth investment. Take a time out, actually go and do a workshop for 2 or 3 days. Think about what you want to do, and then start trying to put together a project team and a multifunctional one. It mustn't just be tax people. It's got to be some other finance people and even people in the business, IT. Bring your IT partners along, because if you put in any automation, they're a hurdle you've also got to work with. But you've got to start somewhere. We've mentioned SARS is investing 3 billion, and it's not going to be in people. It's going to be in technology. And it's not a case of when are you going to be faced with these technological challenges. They're going to come faster than what you think they're coming. So that's hopefully just a bit of a snapshot. It touches on a bit of the journey that we're on, and it's a long journey. Within Unilever, it's going to take us roughly 3 years to complete everything, but it has been worth the effort, and a couple of the grey hairs that have gone with it. Thank you. So back to you, Brian.
Thanks for that, Karl. It is a journey indeed, but one that a business definitely has to plan for and start making all these considerations. I'm pretty sure there'll be questions be asked about that presentation, Karl. So if you have any questions, put them in the chat. We will address them shortly. But quickly, I want to call Tertia. We haven't forgotten about you. I see your president is already up. I know you want to share some success factors and some insights for businesses. What business should look out for when they're on this journey? So please go ahead.
Apologies, I think I just stopped sharing there in my.
You're doing good. There you go.
Well, so as Karl said, firstly, your manual systems are not going to cope. They might be coping now, they're not going to cope, especially when you start auditing and getting into making sure data quality is correct. So let's talk technology. What's the other thing Karl said? You have to use technology. And really what I want to focus on today, and just really high level, is how do you create a future-ready tax office with technology? Now, as we've, companies are different and industries are different. And I know that, not all taxes apply to different companies. So really what I want to focus on today is kind of what are those 3 core areas for tax automation that you should be looking at. And the reason I focused on these 3 is, firstly, these 3 are applicable to everyone. Everyone has to do them. And the second thing, it's also the 3 areas where you can really, if you start implementing it, gives you some early quick wins. It shows you, gives you great insight on where the bugs are. I've called my bugs technology, where the errors are, where the issues are, where can we be better? So what are these 3 core focus areas? Automating your process, from a process management, automating tax calculations, and automating data analytics. Now, let me dig into those a little bit deeper. And I'm going to start with process management. And really that process automation, if you think of your tax process at the moment, it's about how do you create a seamless process from preparation, check, review, all the way through to submission and managing any audits or SARS requests afterwards. I was chatting to a client the other day and they said, one of their challenges is they've got multiple companies, both in South Africa and across Africa. And one of the challenges he says, Tertia, I don't have a way to see what's happening. I don't know if all our tax returns are being submitted on time, if we're paying unnecessary penalties and losing money on interest for just not submitting on time. There's no way for me to see it. And I said, I can see it on if I log into e-filing, but then it's too late. So then it's happened already. There's no way for me to see what are people doing during the month, especially with my African countries. One of the things Karl mentioned earlier is they needed to standardize systems. Because the moment you standardize systems, everyone uses the same system. You have that insight. And that's really what we wanted to do when I talk about process automation. And we like to refer to it as tax workflow management, like that whole process. I'm preparing the work, someone's reviewing it, checking it, and submitting it right through to solid e-filing. And I'm actually going to jump in and I want to show you, sometimes it's easier for me to explain something with screen. So give me a minute, I'm going to jump into Konsise here. You should see a workflow. And what you're looking at there is, this is my company. You can see I've got multiple companies, South Africa, Botswana, the UK. But if I look at my tax workflow, I can see exactly, these are my up and coming tax returns. These are the current returns I'm busy with at the moment. I'm busy with, different VATs across different countries. And these are the ones I've submitted already. So it's just like it's a single view to see what's happening. And at the same time, I can drill down into one of these, and I'll show you just now when I do that. But at the same time, and it's really one of the things that a lot of clients love about Konsise is they said, because we've standardized on one system and we've automated and managed our entire process on Konsise, we can see exactly of all the returns, all the different companies, all the different countries, what's been submitted, what's overdue, what's in preparation at the moment. And like there's an orange one. This one's filing's due soon. It's the 15th of May. Better get this one going. So that's a very, very important aspect when we start talking about how do we automate this process and how do we really just put it on rails. And the benefit of automating that process is exactly what I showed you now, that kind of management and oversight. What's the next area of automation? Automating tax calculation. When I say that word, our spreadsheet fundies are going, no, surely not. We can't do that. And like, what control would I have when it's all automated and it just comes from the accounting system? Like, how will I know it's right? So it's a big part of automation. It's a very important aspect. And Brian keeps bringing up this topic. I'm surprised he hasn't mentioned it yet. Called Tertia, tell me about robotic process automation when it comes to tax. And it's a really fancy, cool word, and I love it. And yes, we apply that technology in Konsise, but that's just the how. And it's cool, cutting edge tech. But really what we do, like if I had to simplify it, is we've got a robot agent that is installed on your premises and talks directly to your ERP solution. And we've already pre-mapped all your relevant ERP data to your VAT 201 form. So one of the things we do in Konsise, and again, I'm going to show you because it's just easier for me to show you, is we automate your VAT 201. So what you'll see me jump on the screen is, I know it's really small when you're looking through this kind of Zoom webinar, so I'm going to talk you through it. But what we've done is we've automated your VAT 201. So if you're on a spreadsheet at the moment and your 12 spreadsheets that you've got, that's a one-kind set. Tertia, we've streamlined this process. We're now on 12 spreadsheets. It used to be much more. So we've taken all those spreadsheets, and what we do directly from the ERP solution, we've populated your VAT 201. You'll see that first column shows me my value, and if I want to know where that value comes from, I can drill down. So that's a very important thing. Is, when you automation, you don't want to lose control. So I can click there, I can drill down, and I can see exactly what are the accounts. If I've got different divisions that make up those fields, I can see exactly what makes up that number, and I can check it. Not just from a preparation perspective, but also from a review and sign-off perspective. Where do these figures come from? Charles always asks about top 10. There you go, on screen, there's my filter to see my top 10. And the VAT's never that seamless. It's not like you just print a VAT report and submit. You typically have to do manual adjustments. So we've provided for that in our solution. So in a solution, you can see the figures, we've calculated it already. So we've removed those spreadsheets, those three potential errors that Karl spoke about. We've removed those. It's all in the system. We allow you to pass manual adjustments. And the manual adjustments not only adjust the VAT 201, but it shows it's there in the system. You can go back, you can review it, you can see exactly what are the adjustments you passed. And this is my summary. So I can see my VAT 201 summary. And the cool thing here, this one's I've already done. You can see my review and sign-off processes are all within the system, all automated. I can, automatically, if I prepared it, I go, I've signed off preparation. It sends an email to a manager to go, Tertia's prepared the VAT 201. Please click here to review. Everything happens within the system. But I can look at my 201, and if I was still busy before my submission, there's a big button here on Konsise that says submit directly to e-filing. And just with that button, we've removed another manual process, something that can go wrong. So from Konsise, you can submit it straight into e-filing, and Konsise will tell you, is it successful? And at the same time, we'll tell you it's successful. We also just download all your sales correspondence straight into Konsise. So we just download the VAT. You'll see there, I know it's very small. You can see it's downloaded my statement of account, shows you my statement of account values that we've taken from e-filing. And it's also popped through a verification. Now, that's really interesting because a lot of people say, we run all these manual processes and sometimes I've got a SARS verification request that I don't know about. And suddenly I hear the deadline's in 2 days. And that's one of the things when you start using proper tech systems that integrate with your revenue services, it's a download and it's just a push straight through into Konsise. I can see I've got an audit. And remember that workflow that I spoke about earlier? We actually just create a workflow for all your revenue services. I'm going to show you this quickly because I suddenly look at the time and Karl and I have spoken too much. So you can see just there's my same workflow just to handle all my tax audits and my verifications. And if it's current one or an old one, I can just manage and track them on Konsise. The last thing I want to speak about, and it's a very important part when it comes to automation, is we spoke about compliance analytics. And you'll see Karl talk about it's had the biggest impact on this journey of theirs when it comes to tax automation. And what we've done in Konsise is we've pre-built targeted VAT exception analytics to actually tell you where you possibly have errors. So what does that mean? We use that same robotic process automation, that same robot that pulls all the data, but it does more. It actually analyzes the data, checks for validates it, checks for completion. And then one of the things we do, and I'm going to show you one analytic quickly, because I think it's just probably the easiest way to explain, is one of the analytics we run is first we run through your entire vendor master data and we tell you, according to the SARS algorithm, where you potentially have invalid VAT numbers. We tell you, but not only, we go one step further with this analytic and we say, not only have you got an invalid VAT number, but you've claimed input VAT for these service providers. And that's something you need to go and fix. And, there's lots of data, lots of detail, but one of the things we've done is we've actually put it in a graph for you so you can quickly see Hills Barton. I've already claimed 45,000 Rand VAT and they've got an invalid VAT number. Now, it might just be someone typed it incorrectly. It could just be a typo. But what it's doing now, it's bringing it to your attention and allows you to fix it. And there are lots of analytics, looking at disallowed expenses, looking at exempt supplies that you might not have coded correctly. And that's really the benefit if you've got something that actually plugs into your data, runs these analytics for you. It really allows you to start correcting and start changing things. And you can see I can speak very quickly when I need to. But I want to run one last slide, I promise, is if you're looking at technology out there, what are the key things you need to look at? And I call them the key success factors when choosing technology. What are the important things you need to look at? I think one of the things is like a single solution that really covers all your tax processes. And the benefit of a single integrated solution that does all these things is the fact that, there's no duplication of work. It's one single version source of the truth. So it's easier to kind of see the process, see all supporting documentation, see who reviewed it, who signed it off, have the analytics in the system. Having everything in one really puts you on another level. Integration is key. Integration is absolutely key. Systems need to talk to each other these days. And it's a two-way integration. It's an integration from your ERP solution straight into your tax tech solution. And then tax needs to integrate into SARS e-filing. So you really have that seamless process. I'm not going to talk about a lot, but having those right controls built into the system really makes a huge difference. And make sure you choose future-ready technology. Karl spoke about how technology leaps forward. People don't implement old technology. Make sure what you implement is future ready and that the team that you're working with can adjust and allow you to be agile and nimble as the rules and regulations change. All right, well, that was as fast as I could go, Brian.
Thank you, Tertia. That was absolutely awesome. As you can see, there's a barrage of questions that have been coming through, and I'm really thankful to Karl, who was jumping on the questions and responding to some of your questions that you were putting on there. Thank you very much, Karl. So keep them coming. We've got a few more minutes. I'm going to see if we can address some of these questions, and I'll start with you, Tertia, quickly, and because Karl has been responding already on the chat. A question for you now is, how do you go about selecting the right kind of vendor for you? If you want to be on this journey, what are some of the considerations?
Like one of the key things is look at a vendor that's can provide you with a holistic solution, like everything in one versus disparate systems, because that is really a short-term approach, is to use different disparate systems and kind of try and clunk them back together. But what's important is whatever you use is that integration, that kind of both ways integration. Make sure that from a vendor perspective, the vendor can integrate into your ERP solution seamlessly. The vendor can integrate into SaaS e-filing seamlessly. You really need those kind of seamless process. And I think the last thing, and that's important for me, and it's a very much a principle at Konsise, is we need to be agile and respond to changing revenue regulations as quickly as possible. So from my perspective, if you are going to select something, whichever vendor you partner with, make sure they're able to adjust with the changing regulations, because we're not just getting ready for today, we're getting ready for the future changes.
All right, Karl, I'm going to come back to you, and we spoke about a lot of the skill sets that are required, but give us a sense, you may have touched on this, but I just want to go into a little bit more. Give us a sense of the automation process. What are the benefits, the return on investment for businesses? What kind of timelines? Is this business specific? What are the things that you need to have kind of lined up to get onto this journey? And what are the expectations?
Look, I think it could be business specific, but it's probably more general than being absolutely business specific. But there might be some businesses where it's going to be a bigger benefit. But we believe that we should get the efficiencies in our systems by the end of year 3. We should have had a full payback. On our business case sort of worked out to about 1.5, I'd say 1.5 years. But I think, realistically, that when everything's flowing, also just because of our phased approach that we used to really get everything, it's only at the end of year 3 that we will really see the sort of full payback have come in. But by that time, I believe we will have recovered our investments through all the benefits. But real payback, I think, when everything is running smoothly, because you're implementing lessons learned as you go along. Believe me, when we did our first 10 countries, we learned lessons which we implemented in the next 10 countries, and we've learned more lessons which we're implementing in our next group of countries. So it's a constant learning journey, and you go back, but and we're picking up process improvements as we go along. So it is, I'd say it's 2 to 3 years.
All right.
If you go it properly planned, I think you'll get there.
Okay, that seems fairly reasonable. Tertia, I want to talk about costs in a sec. How much does this all cost to get this? Is this only big companies that can afford it? Who is it for? Who should automate?
I think, Brian, from a cost perspective, it's very much in relation to the size of the company. This technology is not as expensive as you might think. But if you're a Unilever, that's a global operation and a massive company, yes, I'm sure Karl's investment was significantly more than a South African company who runs 10 companies and has 5 in Africa. Like it's different. So from a cost perspective, it's not prohibitively expensive. And I must be honest, it's not really the cost, in my experience, it's not really the cost that's putting people kind of making people hesitant. It's what you started off earlier. It's, well, nothing's really broken, why change it? Like that's more the reason people are hesitant to change. It's not really broken. It's massively expensive. And you don't have to, get the Rolls Royce of tax technology. We're talking about, someone just asked, like, do I have to do everything at once? And it sounds like a big thing. You don't. It's really a phased approach. Start with one thing. For me, it's always just start with one thing. Start by automating process. Start by automating some of the repetitive work you do every single month, because that will start freeing you up to go, hang on, where else can we get better? Where else can we improve? And once I've got that on rails, I'll definitely start looking at analytics and take that proactive approach to start fixing errors. But it is a journey. And Richard just asked, like, will the automation benefit locally based companies? Richard, absolutely. I think as locally based companies, we've been a bit slack. We've kind of, it just works. Like it works. Some companies get audited every month. Some companies don't get audited. Like it just works. It's kind of fine. But we know what SARS is planning is significant. And I actually asked Karl the other day, I said, Karl, you've been in countries where e-invoicing has been implemented and, this talking direct access to systems. Like, what does that mean for companies in South Africa? Does it mean that you don't have to worry about it? SARS will take care of it and just run it. Like you can just do business as usual. And Karl's eyes went all big and he said, no, Tertia. It gets worse. The moment your revenue services start pulling up their socks and really start getting their act together, they come with questions. And now they've got the data to prove it. And the last thing you want to do is start going, what are all these invoices that you claim VAT for and these aren't valid VAT numbers? And you're going, oh, I didn't know. I trusted that the VAT number is correct. And here's my spreadsheet. You have to demonstrate those controls. So I do think as companies in South Africa, it's different. You know, we not all a Unilever, it's different, but it is something that you have to do and have to start focusing on, putting that on rails. And it's even interesting, you know, Karl mentioned earlier, they were surprised at the errors they picked up. They thought they were running a well-oiled machine. And that happens to a lot of companies we deal with, is like, no, we run a very well-oiled machine. And then we start running analytics and we go, there's some bugs in the machine. We need to go and fix them. But rather you know what they are first, fix them first, then start coming to knock on your door and hitting you with a pen.
All right, awesome. Karl, so as we hit the top of the hour, your last closing remarks, some recommendations. What can you tell our audience? What are the things they need to leave from here, go and do right now?
So what I would suggest is really go and sit and have a good think about it. Do a bit of a brainstorm. Understand it does cost money, it does cost time. But the investment now is worth it in the long run because you can now do it in a planned and a phased approach. If the train comes into the station before you get to the platform, you'll be running and you'll be chasing your tail for the rest of your life. So you're not going to catch up easily. So think about it and really, you know, and actually go and talk to companies that have done it. You know, go and learn lessons. Don't necessarily do it on your own. That's what we did. We went and talked to other companies. We went to advisors to say, bring us some of the companies that you've done this with. Can we go and talk to them? Learn from the journey. You'll be surprised. People are really willing to share how they went about things.
Yeah, absolutely. People are definitely willing to share. Tertia, I'm going to come to you. Your closing remarks, recommendation. Konsise has got a very fantastic platform. What can you tell us?
I think it's a closing remarks, and it was one of the questions that someone posted there, is it is a time investment. And one of the customers we spoke to said, no, they don't want to implement any tax technology because they have to retrain staff. And exactly what Karl said, it is an investment in time, in money, and we all know it doesn't matter what system. Geez, when they update my new iOS on my phone, it takes a few days to learn and kind of get comfortable with the new system and the new iOS and why they move my icon. And that's very much when you're implementing tax technology, it's new and it takes getting used to, like changing from my manual processes, you know, looking for something in a system where I know my spreadsheet that I've been working on for the last 10 years. But the benefit in the long term is significant. And it's about just taking that leap, starting to make the change. And, you know, we'll sit in this webinar a year from now and our results will be very different. And people would have said they've rolled out phase technologies. They found things that they never knew they did. And they're ready for what SARS throws at them. And that's really what we want to achieve.
Thank you very much, Tertia. Sounds very exciting, but there is a lot of content. I'm already thinking we probably need to have a part 2 of this and deep dive into that platform, start figuring it out. And so our next session, we're going into the detail of that platform and finding out, where do I put this? Where submission goes where, and what is the output? So thank you, everybody. Karl Muller from Unilever, thank you for joining us this session. And Tertia Barrett from Konsise, it's been an absolute pleasure. Totally enjoyed this session. Ladies and gentlemen, we've come to the end of an insightful session. Please feel free to reach out to me if you have any questions from CFO South Africa, and I can see how I can link you up with our panelists. But with that, I wish you all a wonderful afternoon and good afternoon.
Thank you.
Thanks very much, everyone. Thanks very much for attending. Thanks, Karl.
Thank you. Thanks, everyone.